Alright, magandang umaga sa inyong lahat. Mag-uumpisa na tayo in a few minutes. No? Maghihintay lang tayo dun sa iba at meron pa naman tayong 3 minuto. Okay, magandang umaga sa inyong lahat. Ipagpapatuloy natin yung ating lecture tungkol doon sa this time is the analysis of cost. So para maging mas malinaw ng kaunti, kasi alam ko malabo ito, itong sa pangalawang bahagi ng ating pag-aaral ay tungkol na doon sa firm. No? So yung nauna nating pag-aaral, yung naging last exam nyo, ay tungkol doon sa consumer. No? So yung introduction to economics, pagkatapos consumer, ngayon naman pinag-aaralan natin, pinagpapatuloy nating pag-aralan ang theory of the firm, no? yung behavior naman ng firm. Okay. Now, nandito tayo sa bahagi na pinag-uusapan natin o din pinag-discussion na natin yung konsepto ng cost. Na ang cost ay hindi naman mahirap intindihin yung basic definition ng cost. Ito ay gastusin. Ano? So now, syempre bahagi ito ng decision making ng isang firm kasi ano ba ang objective ng isang firm? 'Di ba? Mula pa sa umpisa ng semestre sinabi ko na ang behavior ng ating agent, no? Meron tayong essentially basic two agents, no, consumers and producers. Everybody falls under that category. Hindi naman strictly consumer ka lang or strictly producer ka lang. Depende doon sa economic activity mo. Sometimes producer ka, sometimes ikaw ay consumer. Okay, so ngayon, mula pa sa umpisa sinabi na natin na rational ang basic assumption natin, ibig sabihin rationality, no? Ang basic assumption natin tungkol dan sa ating agents. Pag sinabing rationality, ibig sabihin may sense o reasonable ang kanyang action o ito ay ang kanyang action ay guided by reason. Okay, so ano ang basic na what's the basic objective of an agent? It is to make himself or herself as happy as possible. So if it's a consumer, we call that utility maximization. If it's the firm, it's called profit maximization. Of course, nakapaloob sa profit kasi ang basic equation ng profit ay revenue minus cost. Dinandun ngayon yung cost factor. Alright, so pag-aaralan muna natin yung cost na pinumpisa na natin pag-aralan. Okay, so having said that, let me share my screen. May question ako. Pagka nag-share ako ng screen, hindi niyo ako nakikita, no? Nagsa-stop yung camera ko. Tama ba? So, kahit naka-on yung camera ko, hindi niyo ako nakikita, nagiging nagsha-shutdown yung camera ko. Tama ba? Tama. Okay, sige. All right, I was trying to share screen and then naka-on pa rin yung camera but it doesn't work kapag tablet. All right. Okay, so sige, let me share screen. Okay. So katulad ng nasabi ko na noon, ang cost is inevitable. Hindi po pwedeng magkaroon ng production, magkaroon ng operation na walang cost. So saan ba nanggagaling ang cost ng isang production? Nanggagaling ito sa pagbili ng kanilang mga input, no? So it basically land, labor at saka capital, no? Pero para sa ating mas simpleng pag-aaral, yung land is something we set aside kasi fixed input naman yun, no? So it's really we're looking at yung labor and capital, which is uh, the main components of production, labor. Pag sinabing capital, of course, machines yun. Ano? So, ang ating pag-aaral ay nakatuon doon sa choice tungkol sa labor and capital. Ano bang choice? Ano bang choice na ibig kong sabihin? Ibig sabihin, gaanong labor o ilang laborers o ilang labor hours at saka ilang machine hours ang pipiliin ng firm. Ano ang basihan ng kanyang pagpili? Dalawa. Una ay kung yung productivity nitong dalawa, no, labor and capital. Ibig sabihin, pag sinabing productivity, tulad nung discussion natin last time, ibig sabihin yung contribution nito to production. Ibig sabihin how productive or how much it can contribute to production. Holding one variable constant, syempre, no, ceteris paribus. Now, the other is cost. So ibig sabihin, alin din naman dito sa dalawang ito ang may mataas na presyo. Ibig sabihin, kasi hindi naman libre ang labor at capital. No? So pag sinabi nating labor hours, then the firm is paying for labor hours per unit labor hour, which we call wage or salary. And then kapag ka naman capital hours or yung number of hours sa machines, then we call it rent. All right, so the price of capital is called rent and the price of labor is called wage. Okay, so costs affect input choices. So ibig sabihin kung yung main concern ng firm or one of the main concerns of the firm is minimizing its cost of production, and it knows that it's this decision or this concern about cost will affect the choices of inputs, whether it's going to hire more workers or whether it's going to buy more machines or buy more machine hours, whether it's going to allow overtime or not, etc. Those are going to be affected by the cost consideration. So even in the real world, if and when you join the workforce, you'll find out that sometimes a company may choose to retrench, to lower its cost. Maybe it's not doing very well, or it may give up some of its machines, because it's going to replace the machines with labor, because labor is cheaper than machines, and then perhaps if and when labor is equally productive as machines. Okay, so costs are analyzed in order to determine production strategy, which is it's a no-brainer. I mean, of course, costs are going to be part of companies or a firm's production strategy. When you say strategy, when you say from the word itself, it means how it's going to do things. So it's making decisions regarding, whether it's going to be more labor, more capital, etc. And cost is one of the main considerations. There are two basic types of costs. One is called the fixed cost. The other is variable cost. And fixed cost, from the name itself, meaning that this is not affected by the level of production. So it doesn't matter if production is zero. Even if the firm had shut down, or when I don't mean shut down as in went bankrupt, but rather if the firm decides not to produce anything that day, or that week, or that month, or even that year, it's still going to pay for these costs. So examples of these costs would be your payment for let's say office space, right? Your secretary is, or your office labor, the office people the people in the office, those are not involved in the production line. Those are fixed costs, because even if there's no production level, these people have to be paid. When you say variable costs, this is the complete opposite of fixed costs. These are costs that are incurred when there's production, and these costs will vary. That's why it's called variable costs, depending on the quantity produced. So it means that the more quantity is produced, the more variable cost there is. So what would be the variable cost if there's no production? Then it will be zero, because there's zero production. And it's said that costs vary depending on the quantity produced. So if you look at the firm's, let's say, cost statements, and it says, even though the production is zero, let's say, because of the pandemic, for instance, so many firms didn't operate. Many restaurants didn't operate, so their variable costs were zero because they didn't have waiters. There were no purchases of ingredients for the food that they were going that they normally serve, but they were still incurring costs because they were paying for the space. So they were still assuming that the space isn't free. Well, normally it's not. So that would be the only cost that the firm incurs during the pandemic, during the time that there was a lockdown and there were no businesses allowed to operate other than hospitals and grocery stores. Okay, so how are costs illustrated? So there are different types of, aside from naming them fixed and variable costs, then we also categorize the cost in terms of whether it's total or marginal. Now, at this point, I'm hoping or I'm expecting that you already know what marginal means. So whether we mean marginal utility or marginal income or marginal revenue, etc., the concept is the same. When you say it's marginal revenue, it is the increase or the incremental change in revenue when you change output by one. When I say change, it could be increase or decrease, no? So it's the same with cost. So when you say marginal cost, it is the increase in cost when you increase output by one. Okay, so in this table that's presented to you, the costs are enumerated for your understanding. So let's focus on the quantity, which is at the leftmost side, quantity Q. So we have zero quantity, 1 unit, 2 units, 3 units of whatever good this is. Now, let's just pretend that what it could be any good, could be T-shirt or bags or pairs of shoes or pies or cakes or bread, etc. Quantity would be zero. It could be, if it's bread, maybe 1 loaf of bread, 2 loaves of bread, etc., etc. Fixed cost, as I said, even though zero production, which is at zero, it's fixed. No, so it doesn't matter what the unit of or the quantity of production is. The fixed cost is the same. So it's, in this case, it's 55. The variable cost, when zero production, it's zero. When the first unit is produced, the variable cost is 30. When there are 2 units produced, not the second one. Now, there's a difference between the second one and 2 units. Okay, so when there are 2 units produced, the variable cost is 55, etc. up to 6. No, if quantity is equal to 6, the variable cost is 225. So in the total cost is simply adding the fixed cost plus the variable cost. So for zero production, the total cost is simply the fixed cost because it's 55 plus 0. For the first unit of production, the fixed cost is still 55. The variable cost is 30. So the total cost is 50 plus 30, 55 plus 30. The total cost is 85. What is the marginal cost? We said that marginal cost is the increase in cost when you increase production by 1. In this case, that would be from total cost, which is from 55 to 85. So the marginal cost is 0. My pen is now fixed and I can illustrate this now. All right. So this one, I'm sorry, this one. So 55, these two, 55 minus 85. So this is 30. And then from 110 to 85, so 110. So the second unit, the marginal cost of the second unit, not the 2, because the two units, that's a different cost called average cost. Now, but this one is just the increase in cost when you increase production by 1. So from 1 to 2. Okay, in this case, the total cost increased from 85 to 110. So the marginal cost of the second unit is 25. Okay, so that's how we calculate the marginal cost. And I do want you to pay attention to the difference between total cost and how the total cost and the marginal cost are related, because they are, because the marginal cost is calculated from the total cost. So you already know that there's a connection, all right, between total cost and marginal cost, because it's pretty much, like marginal cost is the child of the total cost, because it comes from the increase in total cost as we increase production by 1. Okay, so These costs are assumed to be the lowest. So as our assumption about cost, the objective of the firm isn't to randomly choose what cost, but to focus or to direct its attention, direct its energies towards making sure that the cost it incurs is the lowest possible. So in our analysis in this table, okay, we already assume that these costs are the lowest possible. Okay, so these are no, so if the production is at one unit, the lowest possible cost is 85. No, that this focus your attention on this total cost uh, column. Okay, so ibig sabihin, so at the one unit quantity production, 85 is already, the firm had already done its calculation, its strategy, etc. And the lowest possible cost for one unit of production is 85. The lowest possible cost for 2 units of production is 110. The lowest possible expense or the lowest possible cost for 3 units is 130, and so on and so forth. Okay, so that's one assumption. Okay, we're assuming that the firm has done its homework and that it has already determined that the lowest cost possible, that it's already employing the best strategy possible, the least cost strategy possible, and these are the lowest cost possible as a result of that strategy. Okay, so going back to the assumption, so least cost is assumed to be attained at each unit of output produced. So in other words, this, oops, all right. So in other words, this is considered assumed to be targeting, or sorry, it's assumed to be least cost. All right. Okay. So costs are assumed to be the lowest expenses at each level of output, and these costs is assumed to be attained at each unit of output produced. That's already the strategy. We're taking that as a given. All right. So we're not going to argue about it. Oh, paano nakuha ng firm yan, etc. We're trusting that when these costs were incurred, this was already the best possible way to incur the total variable, the total cost, no, for each level of production. Okay. Okay. So now let's talk about mathematically what's the relationship between total cost and marginal cost. We know that if we graph that table, the table that I just showed you, this one, if we graph this 1, 2, 3, the fourth column, all right, or the second column to the right, the total cost, if we graph that, so if we plot all those points, the total cost curve is going to look like this, the one on your left. All right, so this one, the total cost is going to look like this. Okay, all right, so if we graph all of those points on the table, how do we derive the marginal cost? Well, if we graph the marginal cost column also, it would look like this. Okay, now keep in mind that the marginal cost is derived from the total cost function. Okay, so the graph, this marginal cost graph is connected to the total cost graph because the numbers are connected, because the marginal cost is derived from the total cost. Okay, so you can do it by hand by calculating the marginal cost from a table, or you can simply, if you know calculus, the marginal cost is mathematically the marginal cost is the slope, or the marginal cost curve. Yeah, is derived from the is derived from the total cost curve. The marginal cost is the slope of the total cost. In other words, if you take the slope, all right, at this point, what's the slope of the total cost curve at that point? It will correspond to a number here on the marginal cost curve. If you take, let's say, this one, all right, So it would, how do you get the slope of a point on a curve? You draw a tangent line, and then you take the slope of this straight line. Or you can do calculus and simply derive from the function, from the total cost function. The advanced way of doing this is taking the first derivative of the function. Pero that's beyond the scope of this class. So we're simply just going to say that that we're not going to derive the slope. We're just going to understand that um, the concept of the marginal cost being the slope of the total cost function. Okay, all right. So because they're related, if you graph this the marginal cost curve derived from the total cost curve, it will always be, because of the shape of the most total cost curves, no, the normal total cost curve is depicted by the total cost curve on the left. Okay, which means that if you derive the marginal cost curve, it will always be U-shaped. So lagi siyang U-shaped. Okay? So ibig sabihin, ano ibig sabihin nun? Ibig sabihin that the cost declines, the marginal cost declines in the beginning. Alright, pababa muna siya, di ba? Pababa siya ng pababa. Then it reaches a point here, alright? At this point, it stops and then it shifts upwards. So pataas na ng pataas yung marginal cost pagkatapos itong point na to. Itong point na to corresponds to this part. Kasi at that point of the total cost curve, the marginal cost is zero, or the slope is zero. All right. So any case, magsuswitch na siya. Ay, wait. Hindi pala. Not necessarily. Forget what I just said. Redo, clear. All right. So the point is that at some point on this total cost curve, the marginal cost is going to plateau. No, the slope is going to be constant, and then it will start to move up. Okay? All right. Yun lang kailangan yung matandaan, that the slope of the total cost curve declines in the beginning, which is why the first part of the marginal cost, this part is declining. Means that the slope, when you say the slope is declining, ibig sabihin the total cost curve slope is getting flat. Ito yung portion na yun. Ito yung portion na yun. Tapos magiging straight, magzi-zero na siya, no? Magiging constant na siya. Ayan, it will tama pala. This will correspond to that part. And then it will start to go up. So yung first part ng total cost curve, nagiging flat yung slope niya, no? Kasi ito yung pag sinabing flat, magiging siya, ganitong slope. Ito kasi pag flat siya, ang slope ay zero, no? So magiging ganun siya mathematically, and then magsa-start na siyang umakyat. Ito na yung part na yun ng marginal cost curve. Okay? Alright, sige. Okay. Now, another cost concept is called the average cost. So far, ang alam nyo na ay fixed cost, variable cost, you have total cost, then you have marginal cost. Dagdag natin ngayon ang average cost, which is this one. So what is average cost? It's just total cost divided by Q. Alright, so ibig sabihin ko ang total cost sa table natin kanina, no? Let's say for, ano ba yun? Total cost for the first unit, when Q is 1, alright, total cost is, tinitingnan ko yung table, it's 85. So ibig sabihin the average cost is 85 divided by 1, so it's just 85. When quantity is 2, the total cost is 110. So the average cost is simply 110 divided by 2. So that would be 55. All right. So that's how you calculate the average cost. Okay. Now, another way to calculate the average cost is by keeping in mind that the average cost is simply the average fixed cost plus the average variable cost. So you can derive the average fixed cost from this total fixed cost. So that's just total fixed cost divided by Q is your average fixed cost. Okay, and then the average variable cost naman is the same. You derive it from this one. So it's the total variable cost or just VC divided by Q, and that is your average variable cost. So different ways to calculate the average cost depending on what data you have. Okay, all right. What else? What else can we, what other insights can we get from this lecture or from this chapter? Well, uh, one insight is since the fixed cost is constant kasi fixed cost, di ba? In the table that we had earlier, it was 55. So since the fixed cost is constant, the average fixed cost declines as more output is added. In other words, since your fixed cost is, di ba sa example natin, fixed cost was 55. Tapos quantity is 1, 0, 1, 2, 3, etc. So your average fixed cost is going to be 55 divided by 1, 55 divided by 2, 55 divided by 3. Since the numerator isn't changing, it's fixed at 55. It's only the denominator that's changing. It means that as you increase your quantity of output, as Q rises, your average fixed cost declines because the denominator from this basic equation is rising, no, from 0 to 1, 1 to 2, 2 to 3, etc. Okay, so on the other hand, the average variable cost has a U shape. So it has the same basic shape as the marginal cost. It's U shape, meaning it declines first, then rises after reaching a low point, like the marginal cost. But keep in mind, don't forget, don't make the mistake. The average variable cost is not the same as the marginal cost. It's just that because the average fixed cost or the fixed cost is fixed, if the fixed cost is one number, it's really not uh, affecting the total cost anymore. That's why it's the variable cost that's affecting the total cost generally, no? Kasi the fixed cost is the same. It's 55 no matter how much quantity is produced. So that's why the marginal cost has the same shape. It's U shape, the same as the average variable cost because it's the variable cost that affects the total cost. Okay? All right. Okay. Sige. So, another thing to remember, we have what we call a diminishing marginal return. If you recall, a diminishing marginal return is this phenomenon wherein as you increase your use of an input, the contribution to production, and not the total, marginal, when the additional contribution to production declines. In other words, as you increase input, holding at least one input is changed. No? One input is increased. The additional input, whether it's labor or capital, the additional input increases production, but at a decreasing rate. Okay, so in other words, the additional labor hour increases production, total production, but the incremental contribution of every additional labor hour is decreasing. So positive, kaya siya, well, because the contribution is positive, then the total is increasing. Kasi pag positive, di ba? Ibig sabihin, there's a positive addition to total. So in this case, it's total return. So as long as the contribution is positive, the total is increasing. But the the addition, the addition to production may be positive, but it may be declining. So paliit siya ng paliit, pero positive, kaya lumalaki yung total. Alright? So, now, ang question is, why does the MC curve decline when there is diminishing marginal return? Kasi, so, one note from that was mentioned in the book is that diminishing marginal return, una, does not kick in immediately, which explains why the marginal cost curve is also U-shaped. So, ibig sabihin sa umpisa, diminishing marginal return hasn't kicked in yet. Hindi automatic na basta nag-increase ka ng input, magkakaroon agad ng diminishing marginal return. Let's say nagtaas ka ng labor, no? Let's say for diminishing marginal return to happen, one of the inputs, either labor or capital, must be fixed. If both are changing, diminishing marginal return isn't going to happen. So it will only happen when there is one input that's fixed. Okay, so in this case, let's say it's capital that's fixed, all right, or the size of the plant, whatever, no, and it's only labor that's being changed. So labor exhibits diminishing marginal return, but not in the beginning. It doesn't kick in immediately. So when it doesn't kick in yet, okay, it means that the extra labor, the additional labor is more productive than the previous one. Okay, because the machine's capacity or yung labor complement niya hasn't been reached yet. Kasi merong ano yan merong ideal labor complement. Every machine, or ganun din naman ng labor, merong machine complement. So pag hindi pa yun nararating noong number of laborers mo, yung diminishing marginal return hindi magki-kick in. So nag-i-increase yung productivity ng additional labor. Once na-reach mo na yung capacity ng machine, ibig sabihin yung kanyang tamang labor complement. Nasa yung labor complement nun ay 10. Halimbawa, no? 10 laborers talaga yung ideal niya. So ibig sabihin from 0 to 10, alright, from 0 to 1, increasing marginal return, 1 to 2, increasing marginal return pa, 2 to 3, marginal return, increasing pa rin, hanggang sa 9 to 10, increasing marginal return. Pagdating sa 10 to 11, because na-breach na yung capacity ng machine, yung labor complement niya, then magsisimula ng mag-kick in yung diminishing marginal return kasi crowding na nagiging masikip na yung paggamit ng machines. So nagkakaroon na ng parang congestion sa paggamit ng machines. So then magki-kick in na yung what do you call this, yung diminishing marginal return. Now the reason that when the marginal return isn't kicking in, ibig sabihin yung dahil productive yung labor, no, in this case. So yung cost mo to produce the first, kasi di ba ano yun, the cost to produce the first means, let's say 10 labor hours halimbawa, no, sa first, yung for the first unit means 10 labor hours. The second unit, because the labor productivity is rising pa, hindi pa nagkikick in yung diminishing marginal return. Sa second unit, you don't need 10 hours, you need only 9 hours. Which means that your cost, the amount of money that you pay for labor for the second one is less because you only use 9 hours. The third unit, because hindi pa hanggang 10 tayo, di ba? Hanggang sinabi ko pala 10. Let's say 100 pala yung labor hours na na complement nung machine. So yung susunod na unit from 1 to 2, hindi gagamit ng 10, gagamit lang ng 9. So ibig sabihin, yung cost to the firm is going to be less because for the first unit, it paid for 10 hours of labor, but for the second unit, it only paid 9 hours of labor. All right. For the third unit, it only needs, for the third unit, dahil rising productivity pa, or rising returns pa, probably 7 hours pa lang, or na lang. So ibig sabihin, yung third unit, the cost of the third unit is only 7 hours of labor. Kaya yung total cost nung firm is declining. Kaya yung marginal cost niya is also declining because pababa ng pababa yung kailangang labor complement to produce the additional unit of good. That's why the marginal cost curve is declining when there is no when there's no diminishing marginal return yet. Mali itong question, not question. Sorry. When there is no diminishing marginal return. Right? Hindi yan when there is diminishing marginal return. When there is no when there's no diminishing marginal return yet, the marginal cost curve is declining. So ito yung portion na yan. Pag ganun yung marginal cost curve. Itong portion na to, this is where there is no diminishing marginal return yet. Okay? All right. Okay. So diminishing marginal return eventually kicks in as a result of the fixed input. No? Di ba sinabi ko kanina, diminishing marginal return is only possible when there's a fixed input. In this case, the machine. But as long as the capacity of the machine hasn't been reached yet, or the labor complement hasn't been reached yet, then the diminishing marginal return just doesn't kick in yet. So fun note, there's no fixed input in the long run because time is long enough that all variables can be expanded or changed. So for your information, for your guidance, in the long run, there's no fixed input because the time is long enough that you can vary any amount of input that's used in production. Okay? Alright, sige. Pause tayo ng konti dahil maraming information nito. Sige, process nyo sandali, ha? Okay, so it is the increase, then diminishing marginal productivity of the variable factor of production that gives the marginal cost curve and the average cost curve its U-shape. So the key word here is capacity of the fixed input. So it's the increasing marginal productivity, then diminishing marginal productivity of the variable factor production that gives, or it's the reason why the marginal cost curve and the average cost curve are U-shaped. Okay? Alright, sige. Quickly, no? Medyo kinakabahan kasi ako dahil medyo complicated ito. Meron bang gustong magtanong? But if you have any question, you have to say it out loud kasi I can't see the chat box. If there's no question, I'll proceed. Wala? Wala. So I'm assuming this is clear. Sure. One last call. Is there anything you'd like me to repeat before I proceed to the next part of the lesson? Wala. Okay. Sige. So the next question is, given that the factors of production used by a firm are labor and capital, the question is, how much labor and how much capital, what combination of labor and capital should be used? All right, given that each one has its own quirk, no? They both exhibit diminishing marginal returns, well, increasing in the beginning, then diminishing at some point. But firms are cost minimizers, which means that they're one of their primary objectives, other than maximizing output, is minimizing costs. So the firm strives to produce output at the lowest possible cost. This is the main objective of our agent, the firm, which is profit maximization. So question is, how do firms choose the least cost combination with inputs? Okay. So we start by recalling that firms want to produce, not product. To produce as many quantity as possible at the least cost possible. Okay, so that's the objective. So it wants to produce as many as possible. It wants to produce as many as possible because it's going to sell it. Diba? So it's going to generate revenues from selling the good. But since profit is revenue minus cost, it wants to make sure that its cost is also least. in order to maximize profit. So it is in the firm's interest, therefore, that the marginal product per peso, each factor of production, is maximized. So ibig sabihin, its consideration is the pag sinabing marginal product per peso, each of factors of production, ibig sabihin yung for every additional product that the factor of production, either labor or capital, adds to the firm's production total, the question is, what was the cost of that input, or how much did it cost the firm to have that extra input? So tinitingnan niya. In other words, ang analysis dito is not, ano ba yung total cost ko when I produce 100? Ang analysis ng firm is, well, what was the cost of the first unit? What's the cost of the second unit? What's the cost of the third? All right? Because in order to minimize cost, ang bantay niya doon is the per unit cost. Bawat isang unit. Hindi average cost. Kasi pag average, that would be, let's say, 100 units divided by kung ilang laborers yon. Hindi average cost ang analysis. It's marginal cost analysis kasi the evaluation is for every additional unit. So, sabi natin, di ba, may diminishing marginal return. So, hindi pare-pareho ng cost ang bawat additional unit. The cost to produce the second unit is not the same as the cost to produce the first unit. And the cost to produce the third unit is not the same as the cost to produce the second nor the first unit. So that's how the firm analyzes each unit of production. Right? Hindi yung average in total. What's 100 units of the product divided by the number of laborers? Kasi that would assume that that the diminishing marginal return doesn't kick in. Alam natin it does. It's a phenomenon. It's an empirical phenomenon. Hindi siya theoretical, ha? Diminishing marginal return actually happens. It's not something that's in theory only. It's not an economic theory. It's an empirical observation. Sabihin, nakikita, nangyayari to talaga. Okay? So consider the example. So how does the firm decide what is the best combination of inputs? Consider this example. Target is 10 units of output. The factors of production are labor and capital. The wage is 10 pesos per hour of labor. And rent, which is the price of capital, is 2 pesos per unit of capital. So ito yung mga ano natin, given. The price of labor is 10 per hour of labor and the price of capital is 2 per unit. Okay, so what's the best combination of inputs? Di pwede nating itong i-manual. Sabihin yung isa-isahin natin. Combination A, all right, capital is 10, labor is 2. Remember that each combination here produces 10 units. Sorry, target output mo pala is, I'm sorry. The target output is 10 units. No, take note of this. This is the target output. All right. Okay, that's the tapos yung susunod na table natin, this one, each combination on this table produces 10 units, but the first combination uses 10 units of capital and 2 units of labor. The second combination, combination B, uses 4 units of capital and 3 units of labor. But both combination A and combination B produces 10 units of the good. All right? Baka malito kayo. 10 units of the good ito lahat. Combination A and combination B. Ang question is which costs more or costs less? If we calculate the total cost of a combination A, all right, that would be 10 times 2 kasi ito yung price of capital, tapos 2 times 10, which is the price of labor. So the total cost of combination A is 40. The total cost of combination B is 33. So which makes more sense for this firm to adopt, or which strategy should this firm adopt? It should be combination B because the total cost for combination B is less. So the firm can do this for each combination. It will take the firm forever to do this because there's so many different possible combinations. Okay, so kung manually mo siyang gagawin, hindi kayo matatapos kasi iisa-isahin mo lahat ng possible combinations ng labor and capital that will produce 10 units of the good. All right, so this will take very long. There is an easier way, and economics is wonderful this way because it has found a rule. It's called the least cost rule, which states that if this condition is satisfied, so the marginal product of labor divided by the product of labor, if, oops, this is satisfied, no? Well, for our purposes, hanggang dito lang kasi yung ating inputs ay dalawa lang, no? Labor and capital. So for simplicity, wag niyo consider ito. But this is supposed to be the general rule for all inputs, no? Kasama na din yung mga land at saka yung mga raw materials, etc. But in this case, when the marginal product of labor, what is marginal product again? It means the contribution to total product of an additional unit of labor. Okay, if the marginal product of labor divided by the price of labor is equal to the marginal product of capital divided by the price of capital, once this is satisfied, you have the least cost combination of labor and capital. Okay? All right. So, if these are not equal, okay, so kung sakaling hindi sila equal, reduce one with the lower MPP and will cause the marginal product to rise of the other good. And you keep doing this until the least cost rule is satisfied. All right, what does that mean? Ibig sabihin, when the margin, sorry. When the marginal product of labor divided by the product of labor is bigger than the marginal product of capital divided by the price of capital. All right. It means that the per peso marginal product of labor is bigger than the per peso production or marginal product of capital. Kapag ganito, it's better for the firm to increase its use of labor because labor is contributing per peso, no? For every peso cost of labor, it has a bigger contribution to total production. Then logically, it's better for the firm to hire more labor than to hire more capital. Diba? When that happens, the marginal product of labor starts to decline kasi you're hiring more laborers, diba? Diminishing marginal returns nga. So when it starts to decline, the marginal that equation will start to fall on this one. Oops. Diba? Nag-start tayo sa ganyan This is bigger. If you keep hiring labor, kasi this is what the condition is telling you, this starts to decline. Kasi you're hiring more labor. The marginal product, because of diminishing marginal utility, starts to decline. So this entire ratio starts to decline as well. And it will persist until maging equal na sila. Okay, and in the meantime that this is declining kasi you're hiring more labor, which means that you're decreasing your use of capital. The marginal product of capital starts to rise kasi the reverse of diminishing marginal return, di ba? So both sides of the equation are going to move until you reach that point. So once you reach that point where the marginal product of labor divided by the price of labor is equal to the marginal product of capital divided by the price of capital, then the least cost rule is satisfied. Okay, so remember to substitute the factor of production that has the lower MPP. Sabihin, palitan mo the factor of production that has the lower marginal product with the one that has a higher marginal product. Kasi it makes sense. It's contributing more to total production. Then you should hire more of that or you should use more of that factor of production. Okay, so this is the least cost rule in graph. So, okay. So this one is called an isoquant. So pag sinabing isoquant, itong line, it's similar to the utility curve, no? So ibig sabihin itong curve na to represents, this represents, let's say 100. So lahat ng points dito, lahat yan 100 units. These are different combinations of capital and labor. Ito yung mga combination A, combination B. So pwedeng this is A, remember the the graph, remember C, D, E. Lahat yan different combinations of labor and capital. Diba? And they all result in 100 units of output. Okay? All right. So, oops. So if you have different levels of production, you'll have different isoquants. Okay, so habang tumataas yung isoquant mo, that represents higher output. Okay, so now, ito'y medyo tricky. Kasi yung well, tricky in the sense na yung grasping the concept, no? Pero the slope of the isoquant, okay, ito kinakabahan na ako kasi dito nahihirapan ng mga estudyante grasping the slope. The slope of the isoquant is simply the ratio of the two marginal products. Any of the isoquants. So the slope of the isoquant is simply the ratio. So if you're asked to calculate the slope of the isoquant at some point, no? About dito, tinanong ka, what is the slope of the isoquant at that point? You take the marginal product of capital at that point and the marginal product of labor. So this is capital, this is labor, divided by the marginal product of labor at that point. That would be the slope of that isoquant. Kapag ka dito, iba na naman ang marginal product dyan sa part na yan. Di ba? Kasi the marginal product changes depending on where you are on the isoquant. So, fact, ano lang yan, fun fact. It's a little too advanced for you, pero just for your information that the slope of the isoquant is simply the ratio of the marginal products of labor and capital. Okay. Now, the second part is the isocost. Isocost naman yung different cost level. No? So parang pwede mong sabihin, okay, ang mga choices ng firm is to spend 100 pesos, 200 pesos. In this case, no, the choices of the firm, may budget siya. So the isocost means budget. So bawat line on this graph, it's called these are called isocost. No? Pag sinabing iso, ibig sabihin nun equal. Kaya pag sinabing isoquant, equal quantity. Iso, equal. So pag sinabing isoquant, quant is short for quantity. So equal quantity. Okay? Pag sinabing isocost, meaning equal cost. So any point on this line is the same cost. So ang total cost dito is 3. So any combination dito, any point on this line results in 3, let's say pesos, no? Let's say 3 pesos of cost. Any point yan. So ibig sabihin, kung ito, bawa ito 4 units of capital, ito 1 unit of labor, ito 3 units of capital, ito 2 units of labor, ito 2 units of capital, ito 3 units of labor. It will be the same 3 pesos. Okay? Now, dito naman sa higher cost at the higher isocost, I'm sorry, ito yung different combinations. So obviously, this may be 7, this is also 1. So ito 7 units of capital and 1 unit of labor is going to result in 6 pesos of total cost, etc., etc. Okay? So, you have 2 graphs here, the isoquant and the isocost. Oops. When you combine the two, let's say ang decision ng firm, gusto niyang mag-produce ng 100 units. So hahanapin ngayon niya yung may pinakamababang isocost line, yung pinakamababang budget. Okay, so graphically that's done by combining the isoquant that represents 100 units. So this is the isoquant, desired isoquant. Alright, and then hahanapin niya yung may pinakamababang isocost. Alright, and pag pinakamababang isocost would be this one. Let's say this is total cost is equal to maybe 6, halimbawa. Pero hindi lahat ng combination sa isoquant can result in total cost of 6 pesos. Only this one. Diba? Kasi the others are higher let's say itong combination na to, this is on a higher ISO cost. So it's only this point that will result in total cost of 6. Okay, so whatever that combination is, let's say this is combination of capital star and L star, that is your least cost combination of capital and labor. Okay? All right, so from the graph, so graphically, that's how you find out the least cost combination. Mathematically, that's simply looking for, keeping this equation or keep being faithful to this equation. Remember this equation, yung MPL over the per peso marginal product of labor is equal to the marginal product of capital divided by the product of capital. If we rearrange it, this is going to be PK over PL. Yan. This is the slope of the ISO cost, and this is the slope of the ISO quant. All right. All right. Conceptually lang, at this point kasi, since tangent, no? Tangent yung ISO cost sa ISO quant, at that point, the slopes are equal. Kaya consistent yun doon sa natin dito sa ating math, the least cost rule. So simply stated, the least cost rule states that the lowest cost of production is achieved when the slope of the ISO cost is equal to the slope of the ISO quant. Okay. So now, ito yung mga final words natin about the cost. No? So accounting and economics in the overlap. To determine profit, an income statement is used in accounting. So net income is simply total revenue minus total cost. It's the same as in economics. So total revenue minus total cost is equal to net income, or what we call profit. So variable costs in accounting, those are materials, labor, cost of goods sold, etc. Fixed costs would be office rental, etc. And a balance sheet is a statement of assets and liabilities. Sa accounting naman and economics, there's a big difference because sa accounting, the only costs included are those that are bought, yung may resibo. Sa economics, all costs, including yung mga may resibo, idadagdag natin doon yung external costs, yung mga, let's say, may yung production na nakakasakit ng sa baga, no, yung meron silang pollution, may harm to society yan. That's considered a cost of production pa din. Not the direct cost of production kasi hindi naman yan labor or capital or raw materials, but it costs damage. So hindi mo pwedeng i-produce yung good na yon without causing damage, yun ang externality, without pollution or without residuals. That should be included in the cost structure or in the cost definition. The other is the opportunity cost of owners of business. So kasi sa accounting, normally, kapag ikaw ay may-ari tapos hindi ka nagpabayad sa sarili mo kasi sa'yo yun, okay lang yun kasi hindi ka naman talaga binayaran. Ang binayaran yung waiters mo. Halimbawa, it's a coffee shop. Pero sa economics, dapat yung opportunity cost of your time, kung ikaw halimbawa ay isang profesor, meron kang may-ari ka ng coffee shop, tapos ikaw ang nagkahero for that day. Dapat hindi zero ang cost of labor sa'yo kahit ikaw may-ari kasi yung cost of your time should be included in the total cost of operating the coffee shop. So kung daily rate ko as a professor, halimbawa lang naman 1,000 pesos per day, then dapat may labor cost ako for that day kasi ako yung nagtrabaho sa kaha that day. Dapat ang cost of labor should include my 1,000 pesos ng opportunity cost. So the main difference between accounting and economics is that economics, we include in the cost those implicit costs that do not have receipts. All right, so main difference. So the opportunity cost is one of the main differences. Recall that opportunity cost is the value of the second best alternative of the factor of production. So this is what you have forgone, no? The value of the activity that you forgone. So the value could have been, yung value ng leisure mo, imbis na nagbakasyon ka, nung value ng bakasyon na yon, imbis na nagbakasyon ka, nagtrabaho ka sa kaha dahil ikaw may-ari. That should be included as a cost of labor. So in accounting definition, opportunity costs are not included when costs are enumerated. So that's a difference between accounting and economic costs. So in economics, we do use and include opportunity costs in calculations. And opportunity cost changes. So iba tayo ng opportunity costs. So maaaring yung mga may pinag-aralan, may mataas na opportunity cost kasi maaaring nagtatrabaho sila sa mas mataas ng sweldo. So iba-iba, no? So iba-ibang tao, iba-ibang klase ng opportunity cost, iba-ibang antas ng opportunity cost. And to frame opportunity cost in terms of what has been forgone or lost, think of this way: loss of forgone or lost utility or happiness, leisure, etc. Forgone or lost income. So ano yung trade-off na income mo, and then forgone or lost output, yung what you could have produced if you were not in the coffee shop that day. Okay, so that ends chapter 7. And just in time, 11 o'clock. Maraming salamat. Gahol na tayo sa panahon. Please read chapter 8. Ipagpapatuloy, umpisahan na natin ang chapter 8 sa Thursday. Okay, maraming salamat and have a good day.
Thank you po.
Thank you,
Sir.
Salamat. Okay, so Ralph, Eddie, and Patricia, meron ba tayong issue? Yun lang problem set, no?
Wala naman po.
Okay, sige. I'll work on the problem set and I'll send those to you probably later today. Okay?
Sige po. Thank you.
Salamat. Have a good day.
Thank you po, sir.
Bye. Bye, Ralph. Bye, Patricia.